destroying, for example, I get the question, like if I move my IRA from one IRA to another, is it taxable? So questions that, you know, in terms of the complications about the transfers and so forth that are, you know, are boogeymen that don't apply.
It's a amazing thing. I see we have a phone call coming in here. Again, to remind you, it's 1-866-980-0499. And we've actually changed our board over here. So this will be the first time we'll have a chance to find out whether this is going to work. Okay. So it would be a pain in the neck if it didn't work. When we've got
I see the phone board.
Yeah, okay. We have a new board that's in here today. You think it's working, Richard? We're going to find out in a second here.
Hello, are you there?
Have we got a call that's working?
Hello?
Not getting any sound? Can you hear it from me?
She can hear us.
Okay, well.
I can't pick it back up, I'm sorry.
We can't?
No. Ask her on the air to call back.
Well, can you please call back for us? What line did you come in on, Richard? Okay. If you could call back, we'll see if we can pick you up again. We've got a problem with our board.
I can hear her in the background, but I don't think she can hear us.
Okay. Call back and we'll see if we can do it again, and Richard might have to take the call and refer it to us, and we answer you over the air. So we put a new board in here today, and this was, we didn't get a chance to test it. So, ma'am, if is there a person, is it a woman?
Yeah, it was a lady, that's correct.
Ma'am, if you'll call back, 866-980-0499, then what'll have to happen is Richard will have to ask you the question, and he'll have to refer it to us, because apparently our voice isn't getting through to you once he tries to put it on the board. In the meantime, well, that was semi-exciting, because what happens is, as I understand it, you can correct me, if you have a client, if the bank has a client with an RRSP, and the client moves to the States, the bank can keep on holding the RRSP because there's an exception type of thing.
Right.
But if you decide, if it's your RRSP, and you decide that you don't like that bank anymore and want to go to a different bank, you can't move it then because the bank can't take the new money.
Under the NAFTA legislation and so forth, the regulations basically state, as I understand them, that if you have a client as an advisor, a Canadian advisor, and your client moves to the United States, particularly as pertains to your retirement assets, say RRSP, that because there's a pre-existing relationship, you can continue to do
that account.
You can continue to advise on that account. However, if the client, you reside in California or wherever, and you decide for whatever reason your advisor leaves the business, you're unhappy with your advisor and want to change, you have difficulties because you don't have a pre-existing relationship with anybody else. Therefore, you have to find somebody like ourselves who are registered in multiple jurisdictions in the United States and Canada, which can act for you in the jurisdiction you reside. For example, Texas.
So if somebody had an account here and they wanted to move the account, they can move it to you because you have registered yourself in Texas.
We're a bona fide U.S. registered investment manager, advisor, in most U.S. states. So we have this unique combination of registrations, whether we're Canadian and American. So yes, that's our business, and we focus on that business.
Okay, our lady is back on the air here.
What is your question? So, an incorporated company in U.S. and Canada. You're incorporated in BC and you're doing business in U.S. and Canada? Okay.
Sounds like fun.
It's a tax issue.
Now we have a question coming in where there's the person apparently has a British Columbia company and doing business in Canada and the United States. That's going to be a hard one to answer through.
Mm-hmm.
It's a question about double taxation. She's providing the broker the employment assignment number, and so you're telling me that they're, each time you pick up a load, yeah. So are you a trucking firm? So they're a trucking firm, and their broker is I would assume withholding tax.
This is getting to be, this is going to be a wonderful question. I can tell what's coming down the line here.
Okay, so what you're saying then is that the brokers are withholding tax, you've provided them a, okay. But you have earnings, you have earned money while you have been trucking in the States, and you're asking whether or not you should be filing on both sides of the border. Okay?
Oh dear.
I think David now understands, so if you can hang up and listen to his answer.
Why don't you keep her on just in case I have to answer? Is she gone? Okay. I might have to ask you to phone back again and give me some other information. I'm just going to gloss over this because it's unfortunate that our board isn't working properly, because I would like to talk to you backwards and forth on this. And I'm going to give you an escapism method. And I think it's my September 1998 newsletter. If you go to www.centa.com and click on newsletters on the top left-hand corner and look at September 1998, it may not be September 98, but I believe it is, newsletter discusses this very topic, because truckers and trucking companies, you said you're the incorporated company, are taxable or have to file a U.S. tax return if they're working in the U.S.
They do.
Okay. Can you hear the answer?
And what happens is every state has a different set of rules.
That's right. Ooh, messy.
Every state
Messy.
has a different set of rules.
Yeah.
So there's a federal set of rules. Oh, I see. They're not on the internet. Okay. This is even crazier. They just phoned with their question.
Right.
All right.
How did you get this number for tonight?
Well, I know it was on email, and she hasn't recognized that this question came in. I said, no, it's too busy. I might have to answer especially, but it's a good question. So I presume that they're in Vancouver, but if it was an Ontario trucking company and they went into New York State and they dropped a load off,
Right.
or they picked up a load,
Right.
okay, if they drove into the States and picked up one load, they don't have to file a U.S. tax return, a state tax return. If they pick up two loads, they don't have to. But if they drop off a load and pick up a load, that's considered two.
Oh, I see.
So a Toronto, Ontario trucking company or a Vancouver company that happened to be dropping something off in New York State does not have to do a U.S. state tax return unless they do two loads, more than two. Okay, so
Two
they
or
can drop one off,
more
pick
than
one up.
two.
So you sort of get to take that load, but if you do three, you're in trouble. If you're going through Pennsylvania and all your trucks together drive more than 50,000 miles through the state of Pennsylvania, you now have to do a Pennsylvania tax return and give Pennsylvania state tax on the value of the miles you drove through Pennsylvania related to the total miles that you drove that year times the profit. Okay? If you drive 500,000 miles through the state of Oregon, you don't have to do an Oregon state tax return, as long as you never stop and make a pickup or a load. But if you stop and do one load in Oregon, so if you drop one thing off in Portland, you got to do an Oregon state tax return. Drivers are another story. The drivers are allowed to make $15,000 and not pay tax in the States. But if they are making more than $15,000, now when that law was passed, that law was $15,000.
It's federal law?
Federal.
Yeah.
This is the tax treaty between Canada and the United States. It's Article, it's either 14 or 15, I don't remember. And the trucker, the employee trucker, can make $15,000 in the States and not have to pay tax. But if he makes more than $15,000, and he's working for a company that has some sort of U.S. tax benefit, then they have to pay tax. But if they're only working for a Canadian company, they get the 15,000 exempt, they get the rest exempt as long as they can prove that their Canadian company has no U.S. ownership, no U.S. subsidiary. So if you're working for a company that's got a subsidiary and a subsidiary, you have to pay tax if you're over $15,000, but not if you're under $15,000.
Whoa.